What's going on? Chris here, and we'll just go over just quickly what I see. So, I put this weekly resistance once we broke it on this candle, on this close, on last week. And I don't know, I was thinking about putting it there. Um, it just, I don't know if it's too early to put that there, but we're getting closer and closer together. Some might say that was like a break in some way, but I still think it's within the 2 points of support and resistance that I put. But one thing that I thought was like a big development was this weekly close below. Um, most of the time, whenever we got a weekly close below the moving average channel, it didn't result good on the following week. So, this could be a doji. I have no idea. Um, the best way I could see it playing out on like a low time frame is pretty much that. So this is a daily fair value gap. An engulfing has to occur, and it's the wick of the previous candle low and the high of the wick of the candle after it. And we filled it almost to the tick, and the idea is that this level right here will continue to serve as resistance, and it'll look like a huge rising wedge. If I were to show it on the 8-hour, it would look like this. The 8-hour, here's the trend line, and this is kind of what we expect is just something that range within something like this. Until we get like a break of the highs or lows or highs, but obviously I'm biased. I'm already calling it. It's not too hard to just kind of project. On a smaller time frame, like the 1 hour, this is using the fib. We would remove some of these lines to make it not so. I was just trying to forecast just where things might be. So how the fib works, so this is taken from that high and that low, and once we get above the zero line, this is supposed to be the fake out, and it did. If we slip back under the zero line is now resistance, so we want to sell anything that comes into the zero line, and that would be kind of where we would dump to the previous day, previous week low, previous 3-day low. So that's kind of just what's on the radar. Anything that comes up into here, for the most part, we want to try a crack at it and sell. So that's my bias going in. But for the most part, it's mostly driven by getting outside the moving average channel and just failing it. If we were to take the slow one, we're dead center pretty much. We hit the bear trap, came back up, and now we're waiting to see further instruction from the Fed on Wednesday and Thursday for the Fed rate hike and unemployment. So not a whole lot to say. Fundamentals are bearish. No real use in talking about rate hikes and probabilities of the rate hikes because, it's all probability, so it's pretty much almost 50-50 when it comes to a decision. You might as well just flip a coin. So, it's kind of out of your control. That's what I mean to say. Things that are very noteworthy is this bill. So the Treasury bill, it's basically 4-week to, I think, 12-week, 1 to 3 month Treasury bill. We're going higher. We're testing these highs, and you could think of that as a rejection or a breakout. No one really knows. I think it's like exactly on it. So you can't really call if it's a rejection or resumption. That just slice through a continuation, but it just doesn't look good, you know. So it just doesn't. One thing that I really like to look at as far as a macro standpoint is this is the wrong one. We could look at the two, but in terms of macro, this is the Eurodollar futures curve. It's been cited a lot recently, but it looks like I don't know. It just looks like the the inversion and the hedging is. It just seems like the bad stuff's right around here, like near the bottom when it stops like curving down, and when it starts curving back up, it's just like the danger zone. Percent yield inverted, we're like 81% yield inverted. It's pretty high. If we were to go back, pretty much 06, 07 levels. So that's that. And then this is the bill on a bigger time frame. We've pretty much crossed the last year high level. And then what I wanted to show was the XLY versus XLP. The biggest thing I think is interesting is the rejection. We have 3 more months till this like flushes out, but this is classic market structure, support and resistance. This level acted as support for a lot of candles until this got broken here. This is technically the retest, and this should be the resumption. And that's really bad. It's basically saying that a flight to safety on the consumer level. If we were to just use this, take away some levels, I mean, it basically says that right here, resistance right there on the quarterly closing basis, and then we're about to see if I don't know if support holds. Like we're just in this range, but yeah, it looks like we're getting rejected there at that moving average channel line. So we'll wait and see. It just doesn't look good all around. I mean, go to high yield growth. Looks like it's retest, rejection, retest into this channel and rejected. It's just a matter of 13 days on where we close for credit. Was it long-term corporate credit spreads? Retest, rejection, getting ready to test the lows. That's what it looks like. Lumber versus the gold. I already knew once we closed outside of this moving average channel, just like we did here in 2018 going to 2020, it's just a bad omen. We closed below this, just like we did before 2020, and look what happened. And then leading to 08, going all the way from 05, once we closed below this moving average channel, leading all the way to 08, you just know it's gonna be bad. So that's lumber versus gold in terms of a pair. The move index is up heavily. This is 2020. We're above that. We're almost at 08 levels. We're not far away. I mean, from where it stopped, we're only roughly 5% away from the high of 08 on the move index. So I mean, if you wanted to just sit in a courtroom and be shown like all these forensic evidences of just different sciences of just evidence of either flight to safety or hedging, It's lots of different market instruments and asset classes. They're just kind of yelling from the rooftops like this is happening. The next thing would be like the dollar used. So you could look up the Dixie or USDX. Like, I don't know. It doesn't really matter. Uh, or Euro USD. It's just Euro USD inverted. Um, so Steve Johnson, he's got an interesting view on the dollar. He thinks it's going higher. It makes sense. I mean, this is like a double bottom, and this is like a bull flag. The thing is, like, I don't know where. We got 13 days. This could be a doji here, and just hold. I don't know where this is going to close, but this looks like it's forming some kind of bull flag here, double bottom bull flag. And I thought it would form on the back here, but it just totally exploded. I mean, it still could form on the back. This is the back, so they call it a bulldog. So this is supposed to be the tail. This is the side profile, the back, front foot, back foot, the back of the dog, and this is supposed to be the head. So for a strong dollar, it means not really good things for the future. It means a flight to safety because it's a currency regarded as was a safety currency. What's it called? The Japanese yen, the Swiss franc, and the U.S. dollar are safe haven currencies. So, like, for the dollar to go up, it's not really good for that to go up because it's implying that there's just bad stuff ahead. So, for such a bullish pattern to form on the quarterly, it's just not good for the future. Japanese yen powering up. We're getting close to last quarter high. Euro. It's failing the last year high, and it will see within 13 days if we get rejected from the last quarter high. Now that you saw it from that view, show it from this view. So we had a nested breaker. We broke to the downside and we broke to the upside. So now we're trying to figure out like which side's going to win. If we go drill down, it looks like the bullish side has still got a dog in the fight here. If we close both these lows, then I would say the dollar doesn't have a dog in the fight. But it has to take some time to find some new buyers on the auction model. But here it's saying it's still got a dog in the fight, and it's not over. The euro managed to stay alive this week. Huge bull bid. I have no idea if it's if the pattern is bearish or bullish or whatever. It could be indicative of an inverted bear dog. So this would be the tail. This would be the back, and it's trying to form the head, and it's either gonna fail and hold and be bullish, or it's gonna break to the downside, and we just didn't have that yet. But we do have a 12-hour bearish order block here, so it's implying that we have more bearish momentum associated with the euro, which is a risk-on currency. And we have an untested 4-hour breaker, so the assumption is that we're going to go up here and retest, but it could be left naked, and we got our 4-hour bears here, and we're going to see in the next week if we come down here and if we break it to the upside. It's totally possible, but this last week low, it looks like it's been resistance for this. and we're gonna just go ahead and put a trend line here, and we're just gonna see, maybe this is something that will totally reject the euro and force it to snap next week. Japanese yen, we broke it on the weekly and we retested, and we're resuming off. We're leaving some gaps, but still, it's ready to rip. It's right at that 200 weekly. I think that's what that is, or 150 weekly. It's pretty remarkable. We broke that 12-hour market structure break, retested, and we bounced off it like a trampoline big time. We did break down on the 4-hour, but man, we did reclaim those highs and reclaim this level for the most part. It's just a matter of holding, and it looks relentless. According to the VIX, we broke the weekly market structure. We had a weekly market structure break. We kind of had a retest. It looks like we're just gonna keep going. It looks like a strong. Pretty much retested here, but not like a full retest. Kind of like here on a second or third candle away, because we had a wick here, but that didn't count as a retest here. And for the most part, yeah, it kept on wiggling around until it finally broke down. Here, we just don't know. We just know that it broke, and we kind of closed above the 150, I think. So that looks significant to me. 150 weekly. Or it's either the 24 or the 150. I think 24 is right here, or that's the 30, and then 150 weekly. Yeah, so closing above it, I think that's significant. 12-hour bullish order block held, and we closed above the highs, so it looks like it wants to go higher. It looks like fear is escalating. So it's going to want to retest here and just keep going higher. Or it could just totally take out this 4-hour order block, but at the same time, I just don't know. We just don't know. The fact that it's holding is scary enough. Last time I said it would come down and retest the back here, and it did. And we got a daily bullish order block here, and yeah, we did close above the 200, or no, the 150 daily. I think that's that. Why does it say 700? 700 SSMA. I don't know. It's the 700. I guess it's supposed to represent the 150 weekly. Maybe this is the 150. That's the 150 daily. This is the 24. And this is the 72. But yeah, we closed over the 150 weekly on the day. So that's basically something. I mean, a close over the previous day's high close. The two over the past 3 days. The previous 3 days high close. To have a higher close, that's pretty bullish. Yeah. Taking a look at institutional money. Let's take a look. So institutional money is, I wouldn't say that it's bullish anymore. I just would say just take it easy until the Fed rate hike. Try not to chase after too many things, and whenever it gets extended, and I'll try my best to post a video whenever this goes down. But get ready to position bearish. Like, there might be a thing where we have like a huge volatility spike to the upside on the SP500, and then that's when this goes down. These institutions are smart, and they team up with other banks, and they if you watch margin call, they never lose. So that's kind of just something you have to watch out for. You know, these institutions, they make sure they don't lose. Whenever it comes to some kind of planned, you know, liquidity destruction, for the, like when it comes to getting bailed out, like I don't know, like they don't lose there either. So like it's pretty wild. Let's see. Next, let's take a look at the forecast from Yahoo. Oops, I don't want to do that. I'm gonna click the world. So, a disclaimer: like we have no idea what's really gonna happen, and this is just a best guess. I mean, anything forecasted in the future is a best guess. So using the AI with Q Spectrum 2, we have the AI auto select these, and it's basically saying there's a possible reversal here. And then I also like to throw on a non-AI cycle, and it definitely recognizes a reversal coming up in the coming time. But it looks like come April, maybe we'll see some positive, you know, a good time to buy. But you know, not everybody that watches this is a trader or a trade investor like me, but definitely looks like after March is done, going into April, it looks more positive until it looks negative again going into Q3. But that's kind of just the long and short of it, and we'll see how it goes. I mean, I'll do a separate video of just strategy going into it and trade plan, and go from there.